Profile Traders, and this is the market recap and analysis for October the 3rd. If we go back to the previous recap and listen to what I said, I clearly warned you that we were approaching significant areas of support where this main trend line was in here, and this was also some Fibonacci ratio of a pullback, which I told you will bring in buyers, because 100 years ago Fibonacci said you need to buy here, and today 2014 there's still thousands of people that follow those ratios and react from them when price gets to them. However, this is nothing but a bounce against a short-term downtrend. In my book, until we are below 1980, this thing could turn back down in a heartbeat. If 1980 is broken on the upside, then I'm looking for 1989, 1990, and after that I am looking for 2000. But we are not there yet. This, in my opinion, was a reaction off of support from a run that went from 2015 down to 1920, so we had almost 100 points drop, and this is the reaction of that support level from the trend line that I showed you. That is very normal, but in order to turn this thing bullish, 1980 must be broken. Until we remain below 1980, this could be just simple retracements. So now, in terms of coming down, the first area that we need to break down is 1954. Once we break 1954, we should then go to 45, and once we break 45, next level of support will be 36, and obviously past that we're gonna go retest the low of 1919-ish. On the upside, clearly we need to break the high of Friday, but since there is another high nearby, I will be combining the two and making my resistance line at 67. So in order to go to 1980, the criteria is to break above 1967. So if you want, make yourself a little bracket, 54 for a breakdown and 67 for a breakup. Below 54 we should target 45, above 67 we should target eventually 80. In terms of news, there is really not much. I was just laughing with my own self when I saw the news that the banks declined Ben Bernanke to refinance his home loan. It just makes me laugh. It further reinforced my very sincere thinking that this country is becoming more and more and more a zoo rather than a well-managed, organized place. When a bank is so stupidly silly and incompetent to not give a loan to the Federal Reserve Chairman, it's telling you what kind of a garbage we are dealing with and what kind of incompetent idiots are in charge of this nation. Now we're gonna pass to crude. What we are witnessing here are several factors. Factor number one, crude is telling us that there is a severe economic slowdown that is coming across the globe. You don't need to be Albert Einstein to recognize that. You just have to go look at around the globe and see if there is a single place around this globe that is booming. Argentina bankrupt. Brazil in a severe recession. Asia, China, severe recession now, combined with problems with its neighbor over the China South Sea. It's not actually China, they dreamed it was their sea, over the South Sea. Conflicts possible with Japan. Then we have the North Korea, South Korea over there. Australia is affected by the slowdown in China and every other country around China, Vietnam, Thailand, Taiwan, you name it, all slowed down due to the Chinese recession. Europe, let's not even talk about it. They have been in a recession for the last 30 years. Then Africa, the little activity that it was in there now is stopped with Ebola. United States, all the numbers that we are seeing being released, all fake, all phony, all politically motivated to make this election of the midterm 2014 favoring the Obama's party and saving these incompetents. So we saw that unemployment dropped to 5.9%. Now think about it. The economy needs 250,000 jobs every single month just to fulfill the need of the population growth that is coming to the job market. What is hard to understand is that sometimes you have 150,000 jobs, unemployment rates drop. Some other times you have 200,000 jobs, unemployment rate drops. Sometimes you have 60,000 jobs and unemployment doesn't go up. It's the most ridiculous, the most absurd piece of information that they are feeding the idiots with their numbers. The idiots that really believe that unemployment in the United States is 5.9%. Unemployment in the United States is at 12 to 15%, and it's been chronically that high since 2008 to today. The only reason unemployment is going down is because more and more and more and more people are giving up looking for jobs. And guess what they do? They go and enroll themselves under disability and collect now a disability check rather than carting their behind to a job and earning money working. Then you are hearing that there is no inflation. But you all know, as I do, that when you go out with the money, paper money in your pocket, the value of it is less and less and less. So you take all these things, you combine them, and you see that there is no growth anywhere. And that's what crude is telling us. Crude is telling us that the demand of economies are so weak that even despite the crisis in the Middle East, it keeps on going down and down and down and down. And then the second factor in it is the rally of the dollar. That is legitimate because as price of crude is attached to the dollar, since they all paid for crude in dollar, when the dollar gets strong, crude price weakens. You take all these things combined together, it has pressured tremendously crude to the downside. Can you now say which way this thing will go? It's absolutely impossible. A combination of weakness and a combination of extraordinary massive amount of computer program manipulation, it has made the market extraordinary volatile, extraordinary aggressive, and extraordinary two-sided. So when the market is in such condition where it's so two-sided and aggressive, it's impossible to call a direction right. Therefore, I will give you the parameters of support, resistance, and look for breakup, breakdowns, because that's all you can do. You cannot figure out if this thing is going to go back up tomorrow or for Monday $2, or if it's going to further drop $2. No way to tell. Right now, my bracket goes from 89.36 to 90.22. Below 89.36 to this low here, so we can put a line 89.22 to 89.36. That's the very important support zone. We break that, most likely we're gonna come down, challenge the low down here at 88.3. If we break above 90.22, then I'm expecting it to go to 91.16. So these are the two levels to look for either a breakup or a breakdown. And it will definitely break very easily off these two parameters, as aggressive as it has become lately. For the time being, I'm not covering any more gold, neither euro. They are both an absolute, complete, total waste of time at this point. Trading wise is extraordinary difficult to trade gold. And euro is just day after day after day after day a meltdown. I mean, you want to look at the daily chart of this thing, you just want to throw up. I mean, it's in a complete, total crashing mode. I do not have the courage nor the balls to short down here, but it keeps on going and going. So I have decided for the time being I will not trade neither gold nor euro at this stage. In terms of instrument, I will look back at them when market condition improves a little bit further down the road. So that's about it. Have a great weekend, and like always, if you decide that you want to learn, join my trading room. Membership is extremely affordable at this case, and I can assure you, you will not regret the investment. Talk to you Monday.